All right, intro to day trading. Let's get started. So the first question is, what is day trading, right? So day trading, to keep it in the simplest terms, day trading is the buying or selling of a currency, crypto, stock index, or commodity, okay? So a currency can be something like EUR to USD, which is the euro to USD. A crypto, you all know, like Bitcoin to USD. A stock index is something like NAS 100. And then a commodity are things like gold or silver. All right. So you make money by buying or selling one of those things and being on the right side of the market, right? So like it says here, you make profits by being on the right side of the market as the price fluctuates up or down. Okay. So in this example, if I got in a buy here and I got out of the buy here, I would make profits because price was moving upward, fluctuating up, and I was in the buy. Does that make sense? Put a 2 in the chat. That makes sense. This is like how honestly how I teach. I just like to make sure everybody is with me. All right. And if you have a question about that, this is that time. All right, perfect. All right, let's keep it going. All right, so pay attention to these numbers here. So let's say I got in at, 15320. And let's just say I got out, let's say it was at 15380. So I would take the 380 minus the 320. That is 60 points. That was a 60-point buy. All right. And I'll explain why that matters in a minute. But just know this buy was 60 points. Okay. So you make money in the market by being on the right side of the market as prices fluctuating up. You could have even caught this small sell. If you would have caught it from here to here, you would have made money as price was going down. All right. So that's how money is made in the market. Now, let's keep it going. Now, market hours. All right. So the market is open 24 hours a day, 6 days a week. All right. You have the market split into 3 different categories, right? Or sessions. We have the Tokyo session, which is 5 p.m. to 2 a.m. EST. All right. You have the London session, which is 2 a.m. to 11 a.m. EST. Then you have the New York session, which is 7 a.m. to 4 p.m. EST. Okay. Then you want to keep in mind that market opening, which is my favorite time to trade NAS 100, is at 9:30 a.m. ST. So if you're in Texas, for example, we're CST. So that's 8:30 a.m. CST. If you're in California, that is 6:30 a.m. PST. If you're anywhere else in the world, I'm so sorry. I do not know your time. But you just do the math from there, right? Ask Google, she knows everything. All right. All right, let's keep it going. All right, so Forex versus futures. I'm going to be talking about both of these because NAS 100 can be traded in both of them. Whichever market you want to dive into is up to you. If you want to do both, you can. I do. It's really easy. Once you get the marking your chart up down, any market is really free game for you, right? So let's talk about Forex. So Forex is known as the foreign exchange market. It is the largest financial market in the world. All right. Just like we talked about what is day trading, this is all the same. The way you profit from trading in this market is by the increasing or decreasing of value of one currency, crypto, stock, index, or commodity against another and being on the right side of the market, right? And then we go to futures and it sounds pretty similar. Futures are a type of contract agreement to buy or sell a specific asset. Assets are things like oil, stock market indices, currencies, different products. Like it's really like it's so much. You either market. And it's the same thing. The way you profit is from being on the right side of the market when one of the assets are decreasing or increasing in value. So you can see the similarities of these two. That's why day trading as a whole is just by being on the right side of the market as prices increasing or decreasing in value. All right. Now let's drop some 4s in the chat if you understand futures, Forex and futures, and how they are similar, right? And how the gist of the whole thing is pretty much the same, right? And if you have any questions about it, let me know. All right. Why choose one over the other? We'll get to that soon. That's a great question, but hold it, because I'm actually going to get into why you may want to go this way or that way or that way or this way, right? I'm going to get into that. But that is a great question. All right, another one, Forex versus futures. So money is made in Forex using lot sizes, okay? Lot sizes determine how big your position is in a trade. So there are three types of lots. You have your micro, you have your mini, and you have your standard. All right. In most broker situations, this is typically how the lot sizes are calculated. Now, sometimes for different brokers, they're calculated a little different. You'll get used to it, right? You just adjust. But a standard lot, for example, so if I get in a trade with a 1.00 lot size, that's $10 per point. All right. So remember when I said here, this, if I would have gotten this buy, that's 60 points, that'd be 10 times 60. That 60 points would have made me $600. Okay. But if I would have gotten in with a 0.10, that's only $1 per point. That trade would have only made me $60, right? Or if it's 10 cents per point, right? That trade would have only made me $6. So this is why we could take the same trade, but based on the lot size we use determines how much money a person is going to make. All right, so that is how the money is made in Forex. All right, let's drop some 5s in the chat if that makes sense. And if you have any questions about that, let me know. I'm trying to just really break it down for you guys, okay? I'm hoping this is helpful to the beginners and the people that are new. I'm hoping this is making sense. All right, cool, 5s. So no questions on lot sizes. No questions yet. All right, perfect. All right, so futures. Money is made in futures instead of lot sizes. It's by a certain number of contracts. So depending on what asset you are trading determines how much value one contract holds. So for example, when I trade NAS 100 in futures market, you can either trade a micro mini contract for NASDAQ or a that's actually supposed to say a mini. Let me go back. Let me fix that. Or a mini. All right. So if I trade a micro mini contract, that is $2 per contract, right? So if I only have one contract and I caught that 60 points, that's 2 times 60 is 120. But let's say I put 2 micro mini contracts, that's $4 per point. That trade would have made me $240. But if I use a mini contract, one contract on a mini NASDAQ is $20 per point. So 20 times 60, that's $1,200. Okay, so Forex, obviously, it gives you a little bit more room to be a little bit more lenient, obviously, and grow smaller accounts. With futures, you only have 2 options. You have the $2 per contract with the micro mini or the $20 per contract with the mini. Okay, so that is the difference, right? Let's put some more 5s in the chat if that made sense about the futures contracts. I'm explaining both because I know There are people that are leaning towards futures. Some are leaning towards Forex. Some are not sure, right? We're going to get into it because somebody had a question about why one over the other. We're going to get there. Which one is your personal favorite? I personally like futures. Now I started Forex. I did Forex for literally 4 years. I just started doing futures a few months ago. The transition was super easy because I trade NASDAQ, which can be traded in Forex or futures. Okay. And I'll tell you why I like it better now. All right. So Forex, it is great if you plan to open a smaller account when the time comes to open a live account. If you are brand new, your goal and focus should be learning the skill and practicing in a demo. Do not worry about putting live funds in right now. So if you're thinking like, oh, like I want to trade, but I don't have the money, that doesn't matter right now. Your focus needs to be learning the skill. When you learn the skill, the money will come, okay? So it's great. If you plan to open an account that's smaller, $500 or less, Forex is probably what you want to start with, okay? Some things about Forex is when you open an account with Forex, you have to deposit money and withdraw money through Bitcoin, then to your broker, okay? Now, if you are trading stock indices in the Forex market, they are not, excuse me. Ooh, this cough, dog. They are not traded directly like currencies. You are trading them through CME. That is contracts for difference. Basically meaning in the US, they are not officially regulated. So that's pretty much a con of trading indices in the Forex market. All right. All right, sorry guys. The more I talk, the more my throat's like itching. I'm looking for a cough drop. But all right. Does that make sense with the Forex aspect? Put a 6 in the chat if that made sense. And if you have a question about that, I'm going slow again, just let me know. All right. Perfect. All right. So for futures, it's great if you plan to start with at least $1,000 when it's time to open a live account. The cool thing about futures is you're able to deposit and withdraw straight from your bank account to your broker. Okay. Apex is a future prop firm, correct? Yes, it is. All right. So you're able to deposit and withdraw straight from bank account to broker. You do have to pay brokerage data fees. Okay. I think it can range anywhere from like $9 and up, right? If you're trading stock indices, futures offer direct contracts to the indices, meaning futures is trading the actual assets and is regulated in the US. Okay, so if you're in a different country, you could probably, indices may be regulated in your country for Forex, so you're good. In the US, it's most likely not. All right, so there are brokers, and I think that's the next slide. No, not yet. So there are brokers that actually let you trade like straight from TradingView for Forex, and we'll get into that because in their country it's regulated if you want to trade indices. All right, but in the US it is not. All right. All right, so apps you will need, okay? The first one is TradingView. So this is an app and a website. All right, sorry, I got a cough drop now, y'all, so I should be good. But the website is what you will use to mark up your charts. If you are trading futures, you can also enter your trades here as well. In Forex, you can only enter your trades via TradingView if you are using a regulated broker that does not allow stock index trading in the US. All right. Let me see a question. On which platforms can you trade futures? We have not got there yet. Just give me a moment. All right. But like I said, but good question. All right. Just give me a moment. I haven't got to MT4. I haven't got to that yet. You guys are ahead. But so for TradingView, this is what you use to mark your charts up. All right. You don't mark your charts up on MT5 for Forex or MT4. You want to mark your charts up on TradingView. All right. When you trade futures, you can actually enter your trades here as well. Once again, if you use stuff like forex.com, for Forex, you can enter on TradingView as well. You just can't trade indices, which is what I trade. All right. MT5. You only need this app if you plan on trading Forex. This app will connect you to most brokers and is where you will enter trades. I put MT5 here because I like MT5 over MT4. It's newer and it's cleaner and it's easier to move your stop loss and your take profits. All right. So I like MT5 over MT4 for the person that asked, what about MT4? All right. MT4 and MT5. MT5 is just a newer version. If you're trading Forex, this app is used most likely to enter your trades. Now, I did add something here, Trade Locker. Trade Locker is needed now to trade with a lot of Forex brokers. All right, so whatever broker you're using, and I'll go over brokers in a minute, you want to find out if you're able to trade MT5 with that broker, or if you need to download this new platform called Trade Locker. All right, and this is for Forex. All right. With futures, I take my trades straight off of TradingView. All right. Another website you will need is forexfactory.com. All right. So sorry, I was reading something, but this is a web use for Forex and futures. Okay, this website lets us know when any high or medium impact news is coming up for whatever you are trading. For example, when trading NAS, I want to pay attention to any time any USD major news comes out. So let's go look at that. This is forexfactory.com. I have my settings set here to only look at USD. Now, if I wanted to add, like, I can remove the filter and it'll show all the other ones. So if I'm trading AUD, an Australian pair, I want to be aware of any time there's high impact red folder news for that. But since I only trade NAS 100, I really only care about if any USD pairs have high impact news. So I can apply a filter and I could see, like, okay, today there was no high impact news. Tomorrow there's medium impact, which is the orange folder at 9 a.m. and high impact at 1 p.m. All right. You can also set it to your actual time. All right. Right. So this is helpful in keeping up with the news. All right. Any questions about this? Let's put some more 4s in the chat. If these made sense, we will keep going. There's some more apps and websites. Any questions on any of these? For those that are new, this is TradingView, right? I just changed my colors so the newbies can understand the up and the down. But this is TradingView. You use this to mark up your charts, okay? All right, perfect. A lot of 4s. An MT5 is you can download that on your phones if you're trying to do Forex. All right, investing.com. This is an app, but it's also a website. It is a great way to keep up with the fundamentals, which is news, okay? Fundamentals is news, and then technicals is marking up your charts, right? So let's go to investing.com. You want to go to investing.com, you want to go to news, you want to go to latest. All right. I want to look at anything that is in regards to like the stock market, because I know that has to do with NAS. Let's see. I want to look for what else would matter to me. Or you can even go here, actually. You can actually type in what you're looking for. So let's say I'm like, okay, I'm not getting enough. I can go to the actual thing that I'm trading. I can go to news and I can see anything that mentions it. All right. And sometimes I don't read these whole articles. They're like really boring, not gonna lie to you guys. So I'll just like skip through them and like look for anything important that could, oops, why did it black out? Give me a hint to what the market is doing. All right. But that's investing.com. I have it as an app and I also have it on my computer. All right. All right, CNBC NAS 100. This is a website I use to check if the top companies in NAS are red or green for the day. You can also use if you trade S&P and US 30. So you go to your website, you type in CNB NAS 100, right? You'll come and you'll click the first one, right? Usually it's the first one. And it should come up like a list. Like I have it pinned right here, but I just wanted to type it in to show you guys. All right. So let's wait for it to load. Look at that. All the companies that make up NAS 100 are here. These are the top 10 companies. You may want to write these down, right? So we have 1, Amazon. 2, Apple. Let's see. 3, Adobe. 4. Sorry, I'm looking for it. 4, we have Meta Platforms, which is Facebook. All right. 5 and 6 are alphabet class C and A. These are Google. Google 1 and Google 2. I said 5 and 6. Yep. Okay. 7. We have Microsoft. 8. We have Netflix. 9. We have NVIDIA. 10. We have Tesla. And another good one is Pepsi. So when I am in a trade, I pretty much go here and I look at those companies that I just named and I look to see if they're red or green over here, right? Now, I don't base my whole day off of this. I just look to see if it lines up with my technicals. If it does, it gives me more confidence. If it doesn't, I'm like, oh, okay, well, technicals is saying I should sell, but these are saying buy. I'm going to stick with my sell, but it does help to have these on your side. All right. And look at that. They're doing Black Friday deals, but I don't pay for this. I just use the free version. Okay. Now let's get back to it. All right. We also have Notion. All right. So I do not have Notion up here. Notion is an app and a website that can be used to journal your trades for free. So when you're a beginner trader, you do not need to pay for a journaling platform. I pay for a journaling platform, but I've been trading for 4 years. So it's to the point where I need a more advanced platform to journal my trades. You don't have to do that. Look at this. I was journaling my trades on Notion for literally for free. All right. So I'm going to show you what the journaling looks like. So I just said trade journal November. All right. You can literally come on here and make a template. All right. And in my trading community, I step by step go over how to make this exact template. But you guys can see here, it's pretty easy, right? I just put the trade, and this is not the November. I'm going to show you guys a full one. Let's see. There we go. All right. So we've got the trade. You see this like for the whole month. Trade, the pair, the position, did I buy or sell? The stop loss size, it's the same thing. The open, the session, risk to reward, confluences, the screenshot, and what happened. All right. Now in this, I did start getting a little inconsistent with the what happened part. I'm like, is this my old account? I feel like I have way more than this. But yeah, so you guys can see, I just started putting the take profit, stop loss, or take profit. But as you can see, I'm putting why I entered the trade, right? And then I put the before in the after. All right. So this way I know my strategy works. I know what's working. All right. So look at that. I could see the before. You guys see this before. And then you guys see the after. All right. And so this is a great way to journal your trades for free. All right. It's important to journal every trade you take. All right. Now, going back here, you can also use TradeZilla. This is the website that I pay monthly for. So for those that are a little bit more advanced in your trading, you can pay $49 a month for TradeZilla, which automatically tracks your progress, okay? So completely transparent, this is my TradeZilla, right? Let me get to it. It's loading, it's loading. This is a great $49 that I spend for the month. Like, I'm not gonna lie, this is great. It tracks all my trades. I'm able to pretty much put down, you know, what I took, right? You could view your note and you can put, you know, the trades that you took and what happened. Okay, it's pretty cool. They have a bunch of different features: a daily journal, a trade log, reports, trade replay. They're also adding back testing, right? It also shows you like what you've made, your win rate so far, right, for the month, your profit factor and all that good stuff, right? So it just shows me. I just started using it really in September, right? And so yeah, so you guys can see that. All right. And it's a great way to just show people like your progress, right? This is cool too, but that's even more advanced. All right. Any questions? Let's put some 7s in the chat if that made sense. If you have any questions about any of the apps or websites that I just went over, now is a great time to ask. All right, perfect. Unfortunately, there is no free version for TradeZilla. Can I pay for live data through TradingView only and not through a broker? For futures, you do need to use Tradeovate. All right, and we'll go through that. Recommended brokers. So let's get into that actually. So for recommended brokers, I would recommend Sway Markets. It's my preferred Forex broker. It is considered regulated through Australia, right? I don't know what TZ is. What is TZ? Somebody asked me a question. But okay, it's regulated and it lets you trade NAS. It's regulated through Australia. But you must have MT5. Another one I want to add here is ACO Markets, all right? All right. And that you have to use Trade Locker. All right, so one of these is my recommended Forex broker. Okay, just kind of fixing that up. All right. Can you use TradeZilla with a funded account? Yeah, you just add your orders onto it, right? So when you go to TradeZilla, you go here, you go to add trade, live 150, and you upload, and then you upload the order that you download from Tradeovate. Are any of these sites speech to text inputs? I'm not sure what you mean by speech to text inputs. But okay, so those are for the Forex brokers. That's what I recommend. If you aren't interested in trading indices like NAS 100, you can use forex.com, like for example, or this other one right here. These let you trade straight from TradingView. For these ones here, you're also able to deposit and withdraw straight from your bank account to your broker. All right, and with Forex, you can open a demo account at no cost. How to get a funded account if you're just starting out? Well, first, if you're just starting out, you need to learn the skill. If you haven't learned the skill yet, then working on a funded account's not ideal yet. And we're going to get to funded accounts at the end, okay? All right, so for futures, Tradeovate is the only broker I have tried with futures. I have also heard TradeStation is another great one. All right, these are just for regular live accounts. Again, we'll get into funded accounts at the end. All right, with futures, you're able to deposit and withdraw straight from your bank account to your broker. You're able to connect to TradingView to take your trades for $10 a month. It gives you a demo free trial on Tradeovate. And after Tradeovate's the broker, and after that, it's a $4 a month for the data, right? So futures, it's a little bit more, but again, I like it because I like to take my trades straight from TradingView, okay? Is $10, the $10 is to sync it with TradingView. Yeah, so it's $10 a month to sync Tradeovate to TradingView, because you can take your trades straight from Tradeovate, but I don't really care for the platform. I rather just take them on TradingView. All right. But let's get into the good stuff. All right. Any questions? No, ACO is not regulated. I pay for the live data with TradingView, so that, and the additional $10 is to sync it. If you're talking about for Tradeovate, yes. If you go to Tradeovate and you go to add-ons, here, I don't have anything in my live. I just withdrew, so I'll show you. This one's my live, so I'll show you. Yeah, I withdrew from my live account, and I'm just focusing on my funded right now, and I could show you here where you would add on. See, TradingView activated, $9 a month. All right, and then subscriptions, $4 a month for the level 1 of the market data, right? Can you explain the importance of paying for the live data? You can't trade if you don't pay for it. For futures, they literally will not let you trade if you can't pay for it. All right. Okay. So let's keep going. Great questions, you guys. All right. So let's get into some of those things that contain the market, right? So bulls versus bears. When you hear the term bullish market, that is a market where price is expected to rise/buy. Look how this market is buying. That is called a bullish market. All right. And then you also have something called a bearish market, a market where price is expected to fall/sell. As you can see, the market is falling. All right. Then you have something called retracement. This is retracement. The market was pushing and it pulls back. Then it keeps going. Then it pulls back. Then it keeps going. That is retracement because price didn't reverse to a sell. It just retraced a little bit and kept going. Same thing with here. Price pushed down and then it pulls up in a downtrend. That's retracement. Pulls down, pulled up a little bit, pulls down, pulled up a little bit, pulls down. All right. So that is considered retracement in a bullish and bearish market. Then you also have something called consolidation. All right. So that is when the market is indecisive. It doesn't know if it wants the buyers to be in control or the sellers. So neither are in control and the market is moving sideways. That is called consolidation. All right. Let's put some 2s in the chat if that makes sense. And if you have any questions, now is a great time to ask me. All right, I'm going to show you guys something real quick. All right, a whole lot of 2s. Perfect. So I just want to go into market structure a little bit because this is an introduction call. When you're in a bullish market, you want to look for higher highs and higher lows. Look at the market. This is the high. And now this is a higher low because this low is higher than this low. Now this is a higher high because this high is higher than this high. So when the market is creating higher highs and higher lows, you're in a bullish market. What strategy do you trade? We're not there yet, but we will get there. Great question. All right. So when we're going to get there, trust me, I just want to finish this part. But all right, for the bearish market, we have lower lows and lower highs, right? So this low is lower than this low, right? And this high is lower than this, or this high. No, yeah, this high is lower than this high. Now this is a lower low here, and this would be a lower high. So the lower highs and the lower lows let us know if we're in a bearish or a bullish market, right? So now we go back here and we can see, right? So this is a new high, new low. Look at that. Higher high, right? Higher high, higher low, higher high, right? Lower high, lower low, lower high, lower low, and then it just kept making lower highs, right? It's not always going to look pretty, but you're going to know if the market is making higher highs or higher lows. All right. Another thing that can help with understanding that is, okay, well, we were talking about ranging. So this is a sideways market. You pretty much look for price to break out, start making a higher high, higher low, higher high, higher low, or break out to the downside and make lower highs, lower low, lower highs, lower low. All right. And then let me see. And then just remember, when it's making lower highs and lower lows, the sell is expansion, the reversal is retracement, expansion, retracement. Just kind of what we went over. Expansion, retracement, expansion, retracement. All right. So let's keep it going. If you guys have any questions, let's put some 4s in the chat real quick, just to make sure that made sense to y'all. All right, great. All right, going. So you have something called a Japanese candlestick. So a Japanese candlestick is a type of price chart used to show the opening close of price. All right, I have a bullish candle. This is the close. This is the open. All right. If you have a bearish candle, this is the open and this is the close. And you want to keep in mind the wicks are the small line you see sticking out of the candlestick body. All right. That's how high price got, but it didn't close there. This is how high price got, but it opened here. Or this is how low it got, but it closed there. So, one moment. When we go to our chart, remember we have, this is the open, this is the close. Price got this high, but closed here. This was the open, price got this low, closed here. Now this is the open for this one, price closed here. Open, close, open, close, open, close, open, close. Does that make sense? I hope that's making sense. 5s in the chat if that open and close makes sense for the candlesticks. All right. And while we're on the candlesticks, we want to talk about time frame. The time frame is used to help you analyze the market. Each candlestick represents whatever time frame you are on. So for example, if you were on the 30-minute time frame, each candle represents 30 minutes. All right, so let's go back to that chart. You have your time frames up here. I'm on the 15-minute. Each candlestick represents 15 minutes each. But if I go on the 4-hour, it's the same chart, but each candlestick makes up 4 hours each. So if I highlight these two candles here make up here, 4 hours there. But if I go to the 30-minute, that's what it looks like from a 30-minute time period each. All right, I hope that made sense to you guys. All right, so that is what a time frame is. Okay, it's important to know about the time frames. They help us analyze the market. You never want to stick to just one time frame. You always want to scale down. All right. Next, we have your pip. Can you please explain that again? Yes, so the time frame, each candlestick. So remember, this is a candlestick, this is a candlestick, this is a candlestick. Whatever time frame you're on, that candlestick represents that. So if I'm on the 30-minute time frame, each candlestick represents 30 minutes, 30 minutes, 30 minutes. The full candlestick makes up 30 minutes. But if I go to the 1 hour, each candlestick represents 1 hour. So like this candlestick here, this candlestick makes up 1 hour. When I go to the 30-minute, it's split up into two, pretty much these two, right? 30 minutes, 30 minutes, right? Then if I go to the 15-minute, it breaks it down even more because I'm scaling down, right? Same chart, it's just depending on what time frame you're on, it may look a little different, all right? And it's important to know what time frame you're looking at so you know what each candlestick is representing for that time frame. All right, cool. All right. Let's keep it going. So you also have something called a pip, which is a price interest point. It expresses the change in value of the currency or asset you are trading. It's kind of like what we were talking about earlier. It's the numbers on the side of your screen. All right, these are called pips, price interest point. So for example, like we said, if I got in a buy here at 15955 and I got out here at 16015, that is 59 points. The best way to do it, you could take this measurement tool, drag it from, let's say you entered here and you got out, let's say you got out up here. That's 95 points. All right. So the points, pips, same thing. It expresses the value. All right. All right. So you also have something called support. This is known as the floor. It is an area where sellers have been rejected. All right. For example, boom. That's support. And then resistance would be an area where buyers are being rejected. Resistance. I'm going to go deep into there. I just wanted to know the basics is the ceiling. And then we have the floor. I'm sorry, floor, ceiling. How do you calculate points and pips? Points and pips are the same exact thing. Fun fact. They're literally the same thing. Some people call it points, some people call it pips. All right. Now, depending on what you trade, the calculations may be a little different, but I only trade NAS, so I really only worry about that. And I know it's super easy to calculate it. I know if price goes from, let's say price goes from 15885 to 15940. I'm just going to take the bigger number, 940, and minus it by 885. That's 55 points. All right. Is support same as supply and resistance same as demand? We'll get into that. We'll get into that in a minute. Support and resistance is just the basics of trading. I don't literally I use something called sell and buy stop liquidity in my strategy, which we're going to go over. But support resistance is just the basics. I just felt I needed to add that so everybody knew what support and resistance was. All right. We're about to get in what I use for my strategy after this here. Look, it's almost coming up. But some more definitions to know. Take profit. So take profit is an area set during your trade where you will take your profits. You can always manually exit a trade, but a take profit ensures you are taken out at a certain level if you aren't watching the market. All right. Now, a stop loss is the opposite. A stop loss is designed to help limit losses. Your stop loss can be placed at an area you'd like to cut your losses in the market if it finds itself going the opposite direction of the trade you entered. Okay? You can always manually exit a trade, but it's ideal to set your stop loss as you enter each trade to avoid blowing your account and cutting your losses short. All right? You also have something called a stop loss in profit. This means your stop loss is now set higher than your entry or below, depending on if you're buying or selling. And no matter what price does, you are walking away with some type of profits. All right. You also have something called break even. Setting a trade at break even means you are moving your stop loss point slightly above or below your entry point, depending on if you are in a buy or sell, making your trade risk-free. This ensures that if your trade doesn't play out, you lose nothing, but you also won't make anything. Now, that may be a little confusing, especially if you've never placed a trade before, but as you go along, there are YouTube videos for this. I go over it in my trading community. And then if you're in there, obviously I can help you. But as you continue your trading journey, you'll get these things, okay? They pretty much are what you do after you enter the trade. All right. Let's get into the good stuff. Terms to know when marking up your chart. I am going to show you guys everything I use in one example of it to mark up your charts. The first thing I use as a confluence or a confirmation is an order block. All right, an order block is an area in the market that price is drawn into. Can change your two in a trade. I'm sorry, reword that. Can change your TP in a trade. Yes, you can change your TP in a trade. Great question. But all right, yes, an order block is an area in the market that price is drawn into. We look for price to push into an order block area to potentially reject off of it to give us an entry in the market. So you'll see order blocks, they are similar to supply and demand. I never traded supply and demand, so I don't know your questions about it, but I do know that they are very similar, okay? Because people tell me all the time, all right? But there are two main types of order blocks. You have your bearish order block, which means you're looking for sells off of, and you have your bullish order block, which you look for buys off of. Let's talk about the bearish order block. So a bearish order block is the last up candle here before bearish momentum. All right. You want to look for price to trade into a bearish order block to sell off the area to sell. So you're looking for sells generally around this area. You want to wait for price to trade back into your bearish order block to sell. Okay. You also have something called the bullish order block, which is the last down candle before bullish momentum. You wait for price to trade back into these areas for buy entries. So you want to enter your buy around here. All right. Put a 7 in the chat if that made sense to you. All right. I was wondering why so many of my name is showing up, but it's because when you entered in, you didn't change your name yet. It's funny. All right, let's go. Perfect. So let me go to the charts real quick. Let's look at an order block. All right. We've got one here. You can draw order blocks from body to body or body to wick. When the body is small, I draw it from body to wick. This is the last down candle, right? Or you could have drawn it like this, still hit. The last down candle before upward momentum, bullish momentum. We wait for price to trade into these areas to buy off of. All right. Let's do a bearish one. Here you have the last up candle before this down move. Wait for price trade into it to sell off of. Do you use a gain box? I don't know what that is, so no. If that's an indicator, I don't use any indicators at all. Straight naked chart trading. All right. It's like the fib. Oh, no. No, I don't. What you see here is what I use, right? All right. So let's go to the next one. Don't want to keep you guys too long. The next thing I use is sell, stop, liquid. Oh, if you want to ask a question, just drop it. You don't have to tell me, just drop it. And I'll answer it as we go. Also, y'all got to change your names. And I'm like, Mercedes Theasley. I'm like, that's me. Like, what's going on? As regards to the OB you just showed now. Okay, what's up? This one. Why not retracing back to the highest one? Because why would I pay attention to this one if there's this one here? First, let's get this one out the way. If this one doesn't respect it, then I'll look for that one. To mark my OB, do I have to wait? Does price have to break structure for the order block to be valid? No, pretty much for order blocks, I look to see, first I like to know is price, am I bullish or bearish for the day? That lets me know if I should be looking for bearish or bullish order blocks. There's order blocks all over the screen, okay? All right, to mark my OB, I have to wait for coach of OB. What does that mean? But yeah, these are great order block questions. I have a lot of breakdown strictly order block videos in my trading community. Unfortunately, this is not that call, but these are great questions. But yeah, I always want to pay attention to the most recent order block. So if price is right here, and I'm like, okay, I'm looking for price to retrace back up to keep selling, I don't want to look at this order block here yet because there's this one here. Focus on the most recent one. Can we do the same thing on Sway Market? Sway Market is a broker. All right. You don't mark up on your broker. You just enter trades on it. Trading View is where you mark your charts. Okay, makes sense. Look for the first OB. Yeah. All right. Let's keep it going. All right, great questions, you guys. But the next thing I use is sell stop liquidity. So sell stop liquidity is also known as SSL. It is an area where sellers are being stopped multiple times in the market. Similar to support, you will see SSL when you see sellers are struggling to break an area. Sell stop liquidity is never one price point. It is an area. And it doesn't matter how far price wicked below, it's about the fact that it is struggling to close below this area. You want to look, this lets us know that you want to look for price to take the liquidity below sell stops. Think of liquidity as an area price is eventually drawn into, okay? So as you can see, price is drawn into the area. As soon as price closes below the sell stop liquidity line, I classify that as liquidity taken. And notice here how I had a bearish order block. I could have got sell entries here. So we only went over two things. So I'm only going to show you two things. My first confluence is one, it's rejecting the order block. My second confluence is I'm looking for sell stop liquidity below to be taken. All right. Put a 2 in the chat if that makes sense. How do you differentiate liquidity grab and break of structure? Because break of structure, I typically look for on the higher time frames. Sometimes it is a liquidity grab mixed with the break of structure. Sometimes liquidity grab are fake outs. I'll give you guys a gem that I only go over really on my educational calls. But I look for order blocks below sell stop liquidity. You want to watch these order blocks because sometimes price will reject off of them after it's done taking the liquidity. Okay. All right, perfect. Let's get into buy stop liquidity real quick because it's the same exact thing but flipped. So buy stop liquidity is also known as BSL. It's an area, let me fix that. It's actually an area where sellers or buyers are being stopped multiple times. All right. All right. So similar to resistance, you will see BSL when you see buyers struggling to break an area. Buyers are struggling here, struggling here, struggling here, here, and here. It's never one price point. It's an area. They're struggling to close above this area. We look for price, obviously, to take the liquidity above. Keep in mind, SSL and BSL won't always be taken right away. So I showed you this example here. There's BSL above, but I bet if I went on a higher time frame, it was still in an overall downtrend. It's not ready to take the liquidity above, and it currently is going to keep selling. All right. So you do have cases like that. Buy stop and sell stop liquidity, you really have to study. And then you look for the BSL, the OB above BSL. Correct. Now it's not, you just look at it just in case. You're either looking to take a trade off of it, or you're looking to trade along with it. So like this, for example, this was sell stop liquidity here. Sellers were being stopped multiple times in this area. So first I look for price to, first I honestly look out for this order block here. This, yes, it rejected off here, but it didn't close there. So that's not what I mean when I say watch the order block. I'm looking to see if price is going to trade here so I could sell it down and take liquidity, or I'm going to wait to see what happens, right? So you wait to see, didn't quite come back, but it did, look at that, reject off your area. So you could have gotten a small buy here. Let's say you only wanted to go for 100 points. Well, I'm on the 4-hour time frame, so 100 points looks a little different. 100 points, and with the 50-point stop loss, look at that. It rejected right off that order block below. Right? But look at that. Whoa. Now I see it not only took the sell stop liquidity officially because it closed below, but it's also breaking the buy structure that it had. Right? So then that's when I'm like, block there. All right. Here's another one, for example. We have buyers being stopped multiple times. Area. All right. Buyers being stopped multiple times in this area. Well, first I'm looking for an area to enter, right? Well, the most recent order block below is all the way down here, right? It's a pretty weird looking order block, so you could draw it like this, right? So that's the most recent order block below, right? So I'm looking to see, is price going to come back down, hit that order block? Boom, it hit the order block. I want to take a buy here. I'd have a 50-point stop loss, right? Or I'm just put it there. And then let's say like, okay, the most recent order block above here, if I'm only staying on one time frame, is all the way up here. Now, obviously in real life, I'm going down to different time frames and seeing where the actual most recent one is. And it's actually right here. All right. So price is hitting that area. All right. And then look at that. I got in because price was rejecting off the order block, and I'm looking for buy stop liquidity to be taken. I then watch out for this order block here. Price is not always guaranteed to bounce off the order block above buy stops. So look at that. Rejected it a little bit, and then it just took off, right? And oftentimes, price may come back to that old buy stop area. Look how it's struggling to break that old buy stop area, right? And then it officially, let's see, and then it keeps going. So do you take entries as soon as it hits the order block, or do you wait for candle closure? I am aggressive during opening bell. If I see it is rejecting off my order block and I have other confluences to go with it, I'm aggressive. I don't wait for closure. And I'm glad that you liked the explanation, Kevin. Thank you. All right, let's keep it going. Great questions, you guys. All right, so we also have imbalance, all right? So imbalance in the market, also known as fair value gap, is when price has an impulsive move in the market that creates a gap. If price has a long bullish candle with little to no sellers involved, that creates a gap in the market. When price creates a long bearish candle that with little to no buyers involved, that creates a gap in the market. We look for price to fill these gaps, okay? Imbalance can be used as a confluence because we are eventually looking for it to be filled. Price won't always fill it right away, and sometimes imbalance is filled by creating more imbalance. So let's go back to that example here. Like imbalance was literally created here, right? But it didn't completely fill it, right? On the higher time frames, it takes longer to fill it. But look at this on the 30-minute time frame. This is a strong impulsive move with little to no buyers involved. You know that there's little to no buyers involved because look, there's barely any wick up here that said price even tried to buy. Straight sellers. Then look at that. Price filled the gap. All right. Let's find one for buyers. This one right here. There are like no sellers involved in this candle. Then look at this. This is how you know if imbalance is filled. You drag it. Look at that. This filled it up. All right. Put some 5s in the chat if it makes sense. If you have any questions, let me know. All right, perfect. All right, we're almost done here, guys. Next thing is, and the last thing is failed swing lines. All right. So a failed swing line is when price fails to close higher or close lower. All right. When we see this, we can anticipate a reversal. This is what I mean. This is how high price got here. Price came here, failed to go higher than here. Price came here, failed to go higher than here. Price came here, rejected off this order block, boom, could get a sell entry, and it failed, right? And look at this. So this is how you put all of this together. One confluence, confirmation of why I want to get in a sell. 1, price is failing to swing higher. 2, price is rejecting off my order block. 3, I have sell stop liquidity below. So I'm entering when it hits my order block for a sell. Does the OB have to have imbalance for you to consider it a strong OB? They are considered stronger if they have imbalance, but it doesn't have to have imbalance to be an OB. Can I see the example? Can I see the example of the OB above BSL? You want to see an example of an OB above BSL? Well, I will take you to my ebook real quick. All right. Let's see. Here it is right here. Buyers are being stopped multiple times in this area. Price took the buy stop liquidity, rejected off the order block above, and now is selling. All right. Can you repeat those confluences for shorts? Confluences for shorts, well, the confluences period that I use. Order blocks. Buy or sell stop liquidity. Imbalance. Failing to swing higher or failing to swing lower lines. All right. And let me just do the fail to swing lower real quick. All right. So, yeah, no problem. And all right, so this is how low price got. You can see price failed to swing lower than this low. Here, price failed to swing lower than this low. All right, and it also now is an order block. I'd get a buy entry here. So usually the order block rejection is the last confluence I have. Because 1, I have buyers being stopped multiple times here. 2, I have imbalance above. 3, I have price failing to swing lower. 4, here, price is rejecting the order block. I would get my entry around here for the buys. All right. Real nice and simple. All right. Does that make sense to everybody? I hope that made sense. For my beginners, I know you might be like, this is a lot of information, but I just wanted to give it to you all right now so you just see how things work, okay? I wanted you to see how things work. All right. Yeah, no problem. All right, so a few more slides. I know some were asking about prop firms. Yeah, no problem. Do all your confluences happen on the same time frame? Of course not. You have to scale down. My scale down steps are I start on the daily. I start on the, and then I go down to the 4 hour, then I go to the 1 hour, then I go to the 30, then I go to the 15. The 30 and the 15, one of those time frames is where I enter my trade. Is this type of teaching reinforced on your live sessions? Yeah, my live sessions are when I call trades live. My ebook right now is $8 off. I believe ebook volume 2 is $45. It's $8 off. There is a bundle, but I'm going to get to the good part about that after this. So some things to remember, okay? OBs, SSL, BSL failing to swing are 3 confluences. I think I missed one. Imbalances. I want at least 3 present. I also consider going with the overall trend to confluence. All right. Does fair value gap are only used on the higher time frames? No. All right, some things to remember real quick. Futures have something called a contract rollover / expiration months. So if you plan on trading futures, this is for you. Remember that March, June, September, and December contracts expiration dates. They're the last day you can trade that contract. This really just means that you just need to switch which chart you use to trade and mark up on. All right, it's like really simple. So like right now for futures, this is the chart I trade and mark up on. It literally says December 2023. Once this contract expires, I'm just going to go to futures and find the new contract. Is it possible to get this slide? Unfortunately, not unless you're in my trading community. That's where I post my PDFs. But the video, I will post this video on YouTube. Okay. All right. So remember, all futures contracts have a minimum price fluctuation known as a tick. The tick size is determined by the futures exchange and can vary depending on the type of contract. This is going to sound confusing to if you're new. This is new to me as well because I just started futures. All I remember is 50 points is 200 ticks in the NAS market. 4 ticks is 1 point. All right. Why I like futures a little bit better than Forex. Futures tax can be considered as capital gain, which means, right? Oops. There it is. Which means you are subject to lower tax rates versus Forex. It's taxed like regular income and subject to regular income tax rates. If you're trading demo, don't worry about this. If you're making like less than like even $500, don't even worry about this. This is when you're really making a lot of money with this, okay? But that's just good to know. Getting into these funded challenges. For those that are beginners, you're probably like, what the heck is a funded challenge? They are ran by prop firms that allow you to pay a certain amount of money to take 1 or 2 phase challenges to prove you know how to properly trade. Once you pass phase 1 and 2, you will get a live account of those funds, getting a certain payout percentage for whatever you make on the account. The percentage you get varies on the prop firm you can use. Personal prop firm I am currently funded with is Apex. All right. When I was with Forex, I was with my Forex funds. As you guys know, they shut down, but I am currently with Apex. All right. So when you go to Apex, first of all, are you guys more put Forex or futures for the one that you feel like you would be trading? I want to see what you guys are trading, but I'll show both. Can you take trades from TradingView? Yes, you can take trades from TradingView using Apex because Apex connects to TradeAvate and TradeAvate lets you use TradingView. Futures, both Forex, indices. Indices isn't a market. You can trade indices in Forex or futures. Futures, Forex, indices, Forex, future, Forex. Is it necessary to purchase your ebook before joining the community? No, you don't have to do that. Futures, Forex and indices, futures, both, Forex. Okay, a whole lot of both is what I'm hearing. So I'm going to go into Apex. For my people that said futures are both, if you do not have a lot of money when you are ready, keyword, when you're ready for a live account, you should try getting funded. All right. So when you see this, that means you're going to trade on NinjaTrader. I don't trade on NinjaTrader, so I don't know about that, right? I don't trade that. I scroll down, select your Trade-Evade / NinjaTrader plan. Keyword, Trade-Evade. I want to select a Trade-Evade plan because that way they'll give me an account via Trade-Evade and I can connect that to my trading view. All right. Now, you pretty much have to pay monthly until you pass the account. Cool thing is, Apex is always having a deal. Right now, they're having 90% off the first month and 80% off every month after that if it takes you longer than that. So right now, you can purchase a 150K account for $34 for the first month. You have to make a profit goal of $9,000 and your trailing threshold is $5,000. All right. That means that if you're up $5,000 on the account and you lose $5,000, you're done. Doesn't matter that you were up $5,000. You don't have now $10,000 worth of room. All right. So that's the tricky thing. So there's no challenge there is a challenge. The challenge, you have to pay a monthly fee until you pass the challenge. There's only one phase. This is for futures. One phase challenges, but you have to pay monthly until you pass. They usually have a deal of 71 or 90% off. All right. So, and then you can connect it to TradingView. So let's say you don't have much money. You can only, you want to take a 25K account. 167 times 90%, 150. So you can take a 25K account for $17 for the first month. If it takes you 2 months to pass it, then it'd be 80% off after that, right? But typically you could probably pass this in 1 month. That's $17 you're paying for this account, right? Your profit goal is $1,500 and you have to stay within the rules. All right. Now for Forex, a lot of my students are funded with Smart Prompt Trader or the Funded Trader. So I'm going to show you there. For Forex, it's a little bit different. You pick one of the accounts. It is $267 one-time fee, not monthly. You have unlimited time to pass the challenge. Your maximum daily loss is $2,000. You can't lose more than $2,000 in a 50K account. And your maximum loss total for the whole account is $4,000. Your profit goal is $3,500. Once you pass, does the trailing part go away? No. Once you pass, you shouldn't want that trailing to go away because that makes you have good risk management. All right. The trailing doesn't go away. You just no longer have a profit goal. Okay. Do you have a referral link for Apex? I do. I literally just put it in my community. Any other questions about prop firms? Let me get the link here. Any other questions? No, there's I think you just have to make sure you trade at least like 7 days, and the monthly is due whenever you purchase it. So let's say I purchased today. If from the 20th now to the 20th, okay, I'll recap it one more time, but after that, I'm not recapping it again because I do have a whole call on this in my community that goes into depth. But I'm going to recap it again because it is on the website, you guys. Everything that I'm saying is literally on this website. All right, so you pay monthly until you pass. You get 2 payouts per month. Look at that. You qualify in as little as 7 days. So you have to trade on the account for as little as 7 days. There is a trailing threshold, meaning you cannot go below that threshold. The threshold starts over every day, okay? And it goes up as you make profit. So you want to be careful of that. There is a video in FAQ and help desk that goes over the trailing threshold more. You have to pay monthly until you pass. If it only takes you 1 month to pass, then you're good. You're only paying that monthly once. Okay? Does that make sense? Or what part did you need me to re-explain? There's no daily drawdown, but there is a trailing threshold. All right. Do they accept crypto as payments? I'm not sure. I've never done a crypto payment. I pay straight from my card. They pay out through your bank account, ACH. Yeah, they pay out straight through your bank account. They stopped using Deal and now they pay out through ACH, so it goes right to your bank account when it's confirmed. All right, does that make sense? And I know for Forex, a lot of them, when I was getting paid out from my Forex funds, they asked me to put my Bitcoin address and then they would pay me that way. Just making sure I understand. Example would be 90% off the 165 fee if we get that one. Yes, for the first month. Let's say you need a second month to get to the profit goal of 1,500, then it'd be 80% off for the monthly every time after that. But yes, if you went on Apex right now, you make sure you select your Trade-Evade account. It would be $17 for this month to try to pass for this. Now, let me tell you guys something big that you need to know about futures prop firms. Once you pass, you have to pay for the data. So it's $100 pretty much a month with your funded account that you have to pay for data, or $250 for the whole year. So once I got my live account, I've had to pay that $250 for the whole year, right? And I just covered the data. Futures is a little bit more expensive on that aspect, but again, it's regulated. For Forex, there's none of that. 80% off future months. Yes, if it takes that long. If you pass, there's no more monthly for that. How much does Trade-Evade charge in fees for a full trade? I'm not even sure. I honestly I haven't even looked. I have not even looked. I just been on my Trade-Evade account or my Apex account. I rarely traded futures actually live. I've been trading funded since I switched over to futures because funded is the best. So the 4 contract example is that you can only trade up to 4 contracts at one time. 4 mini contracts, 40 micros. You shouldn't be trading a mini contract on a 25K anyway. Can you explain? Sway Markets is just a broker. It's just a broker you connect your MT5 to. That's it. All right. So you're saying, can I explain my trading for Sway Markets? You just get a Sway Markets account. When you open an account, you connect your Sway, you connect your MT5 to it. That's how you trade. All right. Remember, we mark up our charts on TradingView. We enter our trades on MT5 or Trade Locker for Forex. Each contract, it depends on what you're talking about. If you want to know what a contract is worth, you go to CME Group. All right. NAS 100 is $20 per mini contract or $2 per micro mini contract. But if you want to trade something else, you have to look up how much that contract is going to be because they're all going to be different. All right. So if I want to trade S&P on futures, oops, that was, why is it? Maybe it'll come up as SPX. Nope. Let me just do indices and it'll come up. How can I purchase your ebook? Is there a coupon? Yes, I put the link in, or the coupon code is on my Instagram. But here, so let's say you want to trade E-mini S&P futures. So you type it up, you type up the product on CME Group, and it'll tell you It's $50 per point. That is crazy, right? So you're like, nah, that E-mini S&P, everything is different. You have to look up what you're trying to trade for futures. If you're trying to trade NAS 100, I can tell you right now what it is because that's what I trade, right? But let me see. Where was I trying to go? I want the micro. Let's go to micro. So $20 per contract is like $20 a point on Forex for NAS. $20 per contract means $20 per point. So $20 per contract is not like $20 a point on Forex. $20 a contract is like $20 for a lot size. Will there be any deals to be in your community, or will it always be? It's always going to be $79.99 a month, but I do have a deal for that because I don't want to explain it, but I can't switch just certain people's monthlies to be a certain thing, right? It will try to keep you there, right? It won't just do it for 1 month. But what we're gonna do, so yeah, this is where you go. Whatever you want to trade, like I was saying, you click here and it'll tell you what the product is worth. All right, so a micro E-mini, where is it? It's not showing me. There it is. I think it's specs. It's $5 per point. All right, so everything's different. Does US 30 have a contracts futures? Of course. It is the Dow Jones, right? There's so many things you could trade with futures. So that is the Dow. So you would just go to the Dow. Or this right here. Let me just go back to indices. But yeah, this is where you would pretty much look what you're trying to trade up, right? And I stick to one thing, so I know what that one thing is worth, so I don't have to keep coming back here. But if you are trying to trade a whole bunch of things, then you're gonna have to keep coming back here. You're gonna have to keep up with what equals what. All right, so if you're looking to trade like the US 30, that would be, you have the E-mini Dow Jones, right? And then you have the micro E-mini. So let's go a micro because it's more realistic. And I hope I answered the question for the sway markets question, right? The sway markets is just a broker once again. So look at that. This is only 50 cents per point. So so US 30 is actually less than NAS and S&P in futures, which is the opposite of what it is for Forex, okay? But I do want to get into some things for my community, right? So I know some of you guys have been asking. This is the Have Mercy Trades trading community, all right? We have our signal section. So if you are not on the calls, for example, I let you know pretty much what we're doing. We're looking for sells off the 15-minute breaker on the live session, waiting for opening bell. We are in sells. So I do let you guys know what we're doing, but all of these are taken on the live session, right? We have our timeline. All right. This is where I post if they're having a sale. I post news, or I gave homework for this weekend so I can grade their charts. Then we have the chat. So this is where we all chat together. All right. This is where everybody can chat as one. Okay. Then we have the results section. This is where everybody posts their results, right? So you can see the members are posting their results, their entries. We post losses in here too, right? It's always important to be transparent. So if we lose, I'm like, post your losses. It's okay. Then we have events. If you want to know and schedule your days out for upcoming calls, we have an events tab. Honestly, a lot of people don't RSVP. We be having 100 people in the calls and only 18 RSVP. So that's why I always post the call on the timeline, because I know if they don't RSVP, they're not getting the notification. So I always post it on the timeline because I can notify them regardless. All right. But it's important to RSVP. We also have recorded content. So this is going to benefit a lot of you, especially if you're new. We have a new members call that goes over the community, how to deposit money into sway markets, how to take partials using MT5, future basics, trading psychology calls. All of these are educational webinars. Look at all these educational webinars. There's so much to learn from in the trading community, okay? So much to learn from. Then we have the weekly overviews. We go over every trade we take each week on these calls. All right. Then we have the live trading sessions. You can go back and watch the recordings of the live trading sessions. Going to PDFs. Each call pretty much has a PDF. There are some extra PDFs here, like understanding Forex, take profit tips, trading checklists, all that good stuff.